You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Thank you, Morgan McKenney, for joining us here in this CEO Blockchain series. You know, we always like to educate folks and kind of peel back the onion on what's happening in the blockchain, and to some degree, and maybe lesser degree, but the crypto space. But they all are kind of interrelated in a major way. You have a very unique background in that you come from, a very substantial TradFi organization, otherwise known as CitiBank. Tell us a little bit about your experience there and how you made the big leap on the other side, the dark side.
Thanks so much, Dan, for having me. Delighted to be here. And I feel very privileged to have spent 18 amazing years with Citi around the globe, which for your listeners was 15 years longer than I planned. I'm not a career planner, but I ended up in leading some very large operating businesses at Citi in the institutional space. So helping multinationals, governments, banks operate around the world. This was in the less glamorous unit of transaction banking, which helps move the money, processing $5+ trillion for their clients a day. But I was always a lead the brand for customer value type of person. I have a comp sci degree from way back in the day, and had the opportunity to lead several blockchain projects successfully at Citi. Once when I ran cross-border payments back in 2012 to 2016. So I do consider myself an OG in the blockchain department. Partnering with NASDAQ when they were trying to set up a private market securities marketplace, and they needed seamless digital money on chain, which remains a largely unsolved problem in blockchain land today. So it was an idea ahead of its time, but we actually got something in production with NASDAQ, helping connect the old world of fiat, meaning money in a bank account, USD sterling, that is seamlessly made available on NASDAQ's blockchain system to purchase those digital securities. And the blockchain would actually instruct Citi to make those payments out in whatever currency the seller wanted to receive, right? Hard, cold cash in their bank account around the world. When I was based in Asia 16 to mid 2020, I worked with Alibaba and Ant and led a project from the Citi side to help Alibaba make instant business-to-business payments cross-border. And that was really important. I'm told it's processing $100 billion of flows. Today, they brought in other banks. This used Ant's private blockchain. Ant is the Alipay, basically, company that runs Alipay. And really, again, it was how do you tightly couple blockchain orchestration intersected with the world of traditional finance. And so I learned from those two projects that institutional adoption of blockchain is really hard work. Each of those projects took 1.5 years of my life and a large team at Citi partnering with NASDAQ and Alibaba and Ant. And I had the privilege of working for Jane Fraser as my last role as Chief Operating Officer of the consumer business, which is the other half of Citi, to see how the other half lived. And consumer innovation is really hard work too, right? Because there's a lot of fintechs that have already disrupted the space. But with all that said, what led me here to get to your question here at the CEO of Provenance Blockchain Foundation is really, I feel that we have so many more tools in the toolkit to basically help migrate the world of traditional finance onto blockchain for business value, because people know what a digital asset is. They've heard of NFTs. People know what digital money is. They've heard of stablecoin or USDC or even cryptocurrencies. People might have a hardware wallet to store their assets. They might have heard of Ledger. That's the digital security bit. You need new security solutions if you're actually not only going to own your assets, but control your assets on blockchain. Digital identity is still weak, but I was working on a project. And of course, the networks and the chains are the new rails. They're the new decentralized way of bringing people together to basically transact, to exchange assets. And so we have so many more tools in the toolkit. I felt that institutional adoption had matured. I had never heard of Provenance before, nor its ecosystem. And I was reached out by an unknown headhunter. So, many of your listeners probably that would be, you probably wouldn't pick up the phone. However, the more I looked into it, Provenance is really very far ahead on true institutional adoption of blockchain, again, for business value. This is putting real financial assets. So, this might be a private fund, private market security, a mortgage, a home equity line of credit. Just think of any financial asset, natively issuing that on a blockchain to then do that new digital asset lifecycle much more seamlessly. It's really digitizing the financial infrastructure layer in a way we never could tackle before. And I have called this finance's 1998 moment, or for your listeners old enough to remember when the internet came online, that is how big this is. All of the consumer innovation to date has really been, in the last decade, has been at the consumer app layer, meaning making a better user experience for you on your mobile phone to send payments, as an example. But we haven't been able to attack that financial infrastructure layer. That is heavy, it's expensive, and there's a new way to do that business now, to basically conduct all of these activities that you do to a financial asset on blockchain now. So that's what inspired me. A lot of legs up, and we can get into what that means in more depth. But big picture, that's why I felt we're ready.
Yeah, so Mike Cagney came on the show before and explained what Figure does. Talk to us a little bit about the relationship between Provenance and Figure.
Absolutely, and Figure is a pioneering fintech, and Mike Cagney and his wife founded Figure about 4 or 5 years ago now. And Mike had the vision, and which I totally agree with, is that banks wouldn't be first in to adopt a blockchain, right? Banks, obviously, they're highly regulated. They need to be conservative. Many of them are systemically important. So what Mike and June did is not only they built Provenance, the blockchain, they built a fintech powered by a blockchain, which is Figure. So Figure is a power user, and they've pioneered a lot of firsts in the space. So meaning they were the first to issue digital HELOCs on chain. They were first to do asset-backed securitization on blockchain. They were the first to originate loans on blockchain. They securitized this bundle of HELOCs, and now they're working on a rated asset-backed securitization of HELOCs. So they are originating $200+ million worth of home equity lines of credit in the United States on Provenance. And once you natively originate that asset, it makes the distribution of that asset, which is really important, right? The risk transferal. Figure is an originate to distribute type of firm, right? They don't have a big balance sheet. They're a fintech. And so they have to originate those loans and sell them on to other folks, like banks, like credit unions, like an Apollo. And basically, once you issue that HELOC on chain, you really tie up the credit file with a bow. You don't make all the credit information available on blockchain, right? We have some neat parameters around Provenance that were purpose-built for financial services. So your information, Dan, your address, the amount, your social security, that will never be on Provenance, right? That's kept off-chain. But what's on-chain is that digital fingerprint of that information. That Figure can then provide access to people who want to buy those loans. And they can see, the buyers of the loans can see real-time repayment rates, right? They can sort by FICO score. They can basically slice and dice those loans in any way that they want to buy them. And so it makes that distribution much more efficient. As an example, is one of the benefits in the lending space. So Figure's been a pioneer, power user in a lot of highly intermediated verticals, like lending, like private assets, and in payments. That's where they've focused, and they've really shed a light on how to do it. And they're now white labeling their HELOCs to Movement Mortgage and Home Point Mortgage as an example, because the consumer, from their perspective, they fill out a 5-minute digital application. So fill in, meaning digitally, and then a few days later, fully funded, their HELOC is in their bank account, kind of thing. So it is really a digital wow experience. Some of it's off-chain, and then other bits of it are on-chain. And Figure also owns Hash. Hash is our utility token used to pay all fees on Provenance and used for governance. So you stake your hash as an owner of Hash. That gives you a voice in how the chain evolves, what new smart contracts can come on, et cetera. So Hash is an important component of governance as well. And so Figure has an important voice in that governance, in addition to a lot of other Hash owners, of course.
So where's the line between Provenance and Figure? How do we know which is which? Because it kind of gets confusing, to tell you the truth.
Yeah, so I'm the CEO of Provenance Blockchain Foundation. The foundation exists to support and enable adoption of Provenance blockchain for business value by a wide variety of financial services participants. So our job is to help anybody who's providing financial services in any asset space to help them use Provenance. So we're working on a range of use cases, and we can get into that, beyond lending, beyond private assets, et cetera. So Figure is think of them as a power user. And because they're a large hash owner, they want broad adoption. So Figure and our interests are aligned in the sense that the more people adopt Provenance, the better Figure does, right? They own hash. So, but Figure helps they de-risk innovation because they know, they've proven you can deliver 120 basis points improvement from the mortgage process, right? If you issue the mortgage on chain, you service it, you finance it, you warehouse it, and you securitize it. When you do that on blockchain, because they've done that a lot, right? From a mortgage perspective, you can save 120 basis points. So they're basically in their spaces helping quantify the value of using blockchain in a really active way with real world customers that are relying on them for financial services.
So Figure owns a good chunk of hash, right? Which is a token, right? Provenance is an enterprise that facilitates the blockchain. Is that the way to understand it?
So the foundation itself is a nonprofit entity, right? My day job is making anybody who is providing financial services more relevant for their customers. That's all I do. So how can I help you, financial firm, do your business better by doing some of it on blockchain? And so that's what we're doing at the foundation point of view. So again, we're a nonprofit, non-tax exempt entity focused on sustainably growing the ecosystem. So we have a small team that's focused on helping support from the youngest fintechs who are set up by TradFi folks, right? Traditional finance folks that want to build a better mousetrap of their business, the asset that they know on blockchain, to very large, the Apollos of the world, who are very large asset managers issuing their funds natively on Provenance. So we run the gamut of who we support, and really think of us at the foundation. And the blockchain is an infrastructure layer, right? It's an enabler. It's cloud on steroids. It's another way to help financial services participants basically deliver more value, more efficiently, and realize new revenue opportunities, right? So the blockchain is an infrastructure. The foundation is just catalyzing adoption.
I got it. Yeah. So why does a firm like Apollo come on your platform?
Apollo is a $600+ billion asset manager. They know credit obviously deeply across all kinds of products. And so a killer use case in general for blockchain and financial services is private asset space. And why is that? So this isn't these are assets that are not publicly traded, like on a NASDAQ or NYSE. These are things like private credit, private market securities, private funds. And those assets are operationally intensive to issue and manage, right? Often, I own a number of private assets. The ownership sits in a lawyer's cupboard. It's in a bunch of your emails. There's a lot of back and forths. There's disjointed capital calls, right? So operationally intensive to issue and manage, and non-price discoverable, non-transferable, right? They're locked up capital typically in private asset space. If you're investing in a private closed-end fund, it's like 7 years lockup at least, right? With no hope of liquidity typically. When you put that private fund on the chain, so for instance, Apollo has an Origins digital asset fund as an example. When you issue that fund natively, that LP interest on chain, that's much easier. It's more operationally efficient. And you have the cap table, right? The record of ownership sits on blockchain. So again, it's not sitting in Excel spreadsheets or lawyers' cupboards and paper. It's on the blockchain, the record of ownership. That means then Apollo down the road can also open up liquidity in, say, 3 years' time. They could bring in other folks that might want access to that asset class that weren't in there at the beginning. And there are investors that, of course, maybe need liquidity for whatever reason. So you basically can broaden your investor profile because you make that asset more price discoverable, more transferable. So in private asset space, we're seeing a lot of different types of assets, private market. Hamilton Lane was the first fund to issue a 1940 act, a registered investment fund, natively on Provenance. And that's really big. Why is that big? That's big because Hamilton Lane can allow Mr. and Mrs. Smith, as an example, with $1,000 to get exposure to private markets. If you're an investor with $1,000 to spend, you cannot get access to private markets typically, right? So that is in the registered investment fund, the 40 Act fund vehicle. on chain, you can do that more efficiently. You can significantly broaden access. You're lowering the cost to serve, and you can make this asset class. This is an example of democratizing access, right? To make that asset class available to somebody of a lower net wealth. So those might be some examples in the private fund space for, for why an Apollo or a Hamilton Lane would issue funds on chain.
Your firm and what you do in general is very regulated. How do you address the regulatory environment?
Yes, and the foundation, I don't consider ourselves a firm per se. We are catalyzing adoption of these decentralized platform. The important point to note here is, again, we go back to Provenance Blockchain itself, which is a public chain, which means anybody can be a validator, anyone can start using it. And we can get into why I feel very strongly about open innovation and why that is the future, rather than some of your listeners might have heard of private or permission chains.
Sure.
But we're public, we're part of Cosmos. What that means is there's a lot of developers in Cosmos world that are building capabilities and features. We decide as a sovereign chain, think of Cosmos as the internet of blockchains. Cosmos itself, it's an ecosystem that allows you to stand up purpose-built blockchains for specific use cases. So we were purpose-built for financial services that are regulated and institutional. That means the data privacy that I talked about, we have high throughput, et cetera. So we are supporting regulated players. Apollo is a regulated financial services firm. They have to accredit and qualify their investors for private fund space, as an example. So they still do their accreditation process. Figure issues mortgages. They have mortgage licenses, right? They still have to comply with the requirements of their mortgage license in terms of how they're issuing that mortgage, et cetera. So again, I think we're servicing regulated parties that still, of course, are meeting their regulatory obligations and using blockchain as a part of their tech stack to support some of their business. So hopefully that helps. I think there's the digital money side of things too, right? So I've been talking about digitally issuing financial assets like loans, structured products, corporate bonds, think asset. But then you need the digital money bit, right? And that's the other piece of the puzzle. What that means is fiat linked. So fiat meaning, US dollar, euro, et cetera, what the currencies people know what the value is, right? On an ongoing basis. That money needs to be digitally represented on chain to do what's called an atomic swap, right? You have the digital money, the dollar, let's say digital dollar, and I have the digital financial asset. You and I want to transact. We don't have to go through an intermediary anymore, right? You don't tell your bank, you don't have to tell your bank to do something on your behalf. You don't have to tell your broker to do something on your behalf. You and I can transact as long as you have the one thing I want and I have the one thing you want. The digital money bit needs more regulatory clarity because in my view, it should be fiat linked, right? That's very important. And B, a lot of stablecoins, some of your listeners might have heard of stablecoins like a USDC. In our view, the digital money, banks need to play a very important role in digitizing money on blockchain because banks have the regulatory framework, they have the customer deposits, they have the fractional reserves, they have the risk management. And there needs to be more regulatory clarity for banks to participate in stablecoin land, if you will. And we have something called USDF, Bank Minted Tokenized Deposits. What that means is if you're a member of the USDF Consortium, and there's, I think, 9 member banks today, that bank can issue USDF on the back of their customer wanting to do something with the money that they have deposited with that bank, and basically send USDF to the other bank in the consortium, who then credits their customer immediately. What this really is a collective bank coin, right? So every bank that participates agrees to accept USDF minted by New York Community Bank, as an example, who's a member, and then credit their customer. And that's really important for ubiquity, right? No matter how big, and some of your listeners might have heard of JP Morgan coin, et cetera, no matter how big one bank's coin could be in their ecosystem, it's 15% of the market, let's say max, right? There's 85 other percent. So we view bank minted tokenized deposits are a really important way to get digital money safely on chain in a regulated context. But stablecoin legislation is evolving. For instance, in the US, there's different bills that are going through. for non-bank stablecoin issuers. But ultimately, if you fast forward in the world, banks will be minting, in my view, tokenized deposits to help get money on chain safely.
What's in it for the banks? Are they going to be making more money as this happens?
Relevance. So you can't, if you don't have, again, banks have the balance sheet, that's a strength, competitive advantage, and they have customer deposits, right? So they take in, bank's core business model is take in low cost deposits and lend them out at higher rates. Like that is the core of banking. And so if they can tokenize those deposits, it's another way to retain them, right? Because basically it's already in your wallet. If you have $10,000 with the USDF Consortium member bank, the consumer doesn't have to buy USDF. It's already in your wallet. It's in your bank account and it's just minted. It's the rail to move the money. So I think relevance. In tech evolution, it's always about customer relevance, because if you can send digital, the amazing thing about these rails, these new rails of blockchain, is you can transfer value. Again, one of the core challenges in the world, when we have the internet helps us with everything, the only thing it doesn't help us with is move something from me to you. It blasts out copies, right? And folks have heard of Web3. It's sort of the read economy, right? First you read stuff on the internet, then you read it, right? Social media, you publish to the world. Now Web3 is you own it. And the problem in digital land is you're always sending a copy. So blockchain enables you to actually pluck something from my phone. It's not a copy of a picture, it's the picture. The picture leaves my phone and goes to you conceptually. So, we've already seen, USDC has a lot of billions outstanding, et cetera. There are many use cases for these new rails of sending fiat equivalent-y kind of money. So, don't fight the march of time, I'd say, in terms of technology development is a really important, especially, banks have had a regulatory moat around them, but you can harness blockchain in a regulated way still. So that moat and that reliance on all of your assets and all of your funds at these trusted intermediaries, blockchain is very disruptive to that, because it means I don't have to leave my assets with that trusted intermediary. I can custody them myself. So if we think about all the assets banks hold, if banks and other large financial institutions don't adapt how they do business, they risk these assets ultimately leaking out in other places.
So I think I read that about $12 billion has been transacted, right? On your chain.
On Provenance, yep.
Yep. So if I've got a mortgage, we'll say hypothetically at, CitiBank, right? And I want to do a HELOC for whatever reason, I don't have to go back to Citibank. I can go to you. And in the case of Citibank, it might take 45 days, but if I go to you, it might take 5 days.
Yes, and again, we are the foundation helping support growth of Provenance Blockchain. Figure is productized capabilities on the chain, including the issuance of mortgages and including the issuances of HELOCs. So think of Figure as an app on the blockchain that has capability that supports specific asset classes. So you would technically go to Figure for a HELOC. That would be done on Provenance Blockchain. And absolutely, I think the $12 billion, a lot of that is lending assets, so mortgages and now HELOCs. Obviously, interest rates have risen significantly, so HELOCs are flying off the shelves from a customer demand point of view. And that's why that origination to distribute model is so important, right? Because the demand is there. People's house values have appreciated considerably. Interest rates have risen considerably. People don't want to refinance their mortgage, right? But they do want extra cash that takes advantage of the value of their home to, help fund their kids' education, all of this. And so, if you can get that distribution right, and that's where this rated ABS is coming in, this rated asset-backed securitization. So it's really, you're not even having to pluck out the specific loans. You get a range of credit profile, right? That's affirmed by a rating agency effectively. So absolutely. So HELOCs are great. So a lot of that 12 billion is lending. The rest of it is in private asset space. So private funds, private market securities. And we're working on other use cases like infrastructure lending. This is almost $100 trillion market. This is funding roads, bridges, power plants. These are big infrastructure projects. The only folks that can lend to support those projects are banks because they have this huge balance sheet. Banks can't do anything with that asset today, particularly it sits on the balance sheet. So if you can tokenize those assets and the cash flows ultimately of the underlying loan for that infrastructure, which are good returning assets, low probability of default, long tenor, of course. If you tokenize that, you can make those cash flows basically investable by pension funds and insurance companies. So you broaden the ability to invest in that asset class by tokenizing it, as an example. And that's just one. We're working on distressed use cases. Some of your listeners may have spotted, I'm sure they've heard of the Celsius bankruptcy. This is, one of the several failed basically token trading and lending kind of models. But a firm called Nova Wolf has been awarded from the credit committee for Celsius, basically to manage the bankruptcy in ways that maximize the value back to the claim holders. And those assets will be put on Provenance as an example. So distressed asset space, how do you issue those effectively claims on chain and enable people to trade based on how they view that distressed asset will perform, with many different opinions, and take upside in the appreciation of the workout as well. So it's a really novel way to return more back ultimately to the claims holders by putting those distressed assets on a blockchain, which is Provenance. So these are some of the other use cases we're working on that we're hoping are coming on chain soon to add to that $12 billion of asset and transactions supported on Provenance.
So for a long time, a lot of these very large banks have had huge hold on financial services. Is it fair to say that some of the regional banks that have gotten involved in what you do have done it because there's a benefit to them where they can be more nimble, right?
Absolutely. And I think this is one of the big appeals of USDF. A lot of the banks that have participated are more local community or up to regional banks. And this allows, a smaller bank doesn't have the $12 billion that JP Morgan has to invest in tech a year, right? So enabling them to participate in the digital economy is a really important, again, way to be relevant to their customers. So we're super excited. Again, to have true mass adoption of blockchain and traditional financial services, you're going to need the small banks because they are serving locally, as well as the big banks, right? So we need to find solutions that ultimately can attract successfully both. But for now, we're giving a leg up to folks that want to participate and don't have the depth of spending that JP Morgan or Citi might have. So we're really excited about our member banks for USDF.
And how do you grow that network, that consortium? Because that's of course a challenge, right?
Yeah, one of the main reasons and ways is, and there's a CEO of USDF Consortium. His name is Rob Morgan. If folks are interested, they should reach out to him on LinkedIn. He's driving consortium growth. USDF is minted on Provenance. And basically, he's establishing a second kind of membership category that allows people more like a trade association. So previously, you had to commit to mint USDF to join the consortium. And Rob has made the decision to broaden that out for a second category where it's for advocacy, especially given stablecoin legislation, and for education and awareness to help build up kind of knowledge of how the solution is working so that then those banks could mint in the future. So that's one important way. And being focused on use cases of relevance, right? So that's the use cases in getting that ecosystem, whether they're doing a lot of commercial real estate or they have a lot of small business flows. A lot of it is about the flows of those banks and how USDF could help them with their customers.
Title insurance has always been a little bit of an issue for me and for a lot of people. Do you think title insurance will eventually be on the blockchain?
It's a great question. There's a few principles in this thing to drive adoption, and I'm viewing it as building the bridge to the future, slat by slat. And when I say that, I mean asset class by asset class. And we're starting with the high friction ones. That's why private assets is important, right? High friction, opaque, slow, inefficient. We haven't tackled insurance generally yet in our ecosystem. There's many folks that have tried. I think in general, insurance companies, big picture, have historically trailed even banks, right? There have been some bright spot POCs, but in terms of automation and digitization, I would say very grossly generalizing. Title insurance, I don't know enough about specifically to answer that question. I think, you know, the core capabilities of a blockchain are issuing the asset, the registry, who owns the asset, and exchange, transferring or selling or buying the asset, right? Those are the three core functions. And so will title insurance go on chain? Can't answer. What we can say is that, you know, blockchain helps make the current status of ownership of the thing, of the, you know, the title in that sense, very, very clear and immutable. So that's where this registry piece is so important. Who owns the thing right now, and then in 1 minute and the next minute. And you have the whole historical trail of that as well, of the history of ownership, which is really groundbreaking. You really can't usually track the provenance of an asset, right? In most use cases. So I can't answer, TBD.
That's fine. Listen, I'm surprised you haven't, you know, used the verbiage immutable, by the way. That's one of the beautiful things about the blockchain, of course, right? So it's always a hard thing for me to ask. I have a daughter who I have great ambitions for, and I know she's going to change the world.
Dad would.
Yeah. And you're first a CEO, but you happen to be a woman CEO. I think what you're doing is so incredibly groundbreaking. How do we get more women involved?
Yeah, well, one of the things, and it's an important question, and so thanks for the question. I'm an innovation person at heart, right? And this is disruptive innovation ultimately. And the best innovation comes from diversity of thinking. And that's how magic happens. Innovation is an art and a science. And you need the blue sky thinker. You need the critic, the person that doesn't think anything's going to work. You need the person that knows the client needs, people who know the old plumbing, people who know the new plumbing. So, you know, as we think about innovation, and if I speak about financial services start, banks always thought they could do everything themselves, right? For a long time, they could innovate. And then fintechs came, right? And then banks finally realized, every bank, they can't do everything. They have to rely on fintech. So everybody, Citi was actually one of the, I'd say, earlier firms that really started partnering with fintechs thoughtfully to bring in their agility, their new tech, et cetera. In decentralized platform, it's collaboration PhD, right? This is co-opting a passionate ecosystem that wants to build the future. And the fact we are a public chain means Provenance is helping crowdsource the future of finance. That is incredibly powerful. That means it's not in the hands of 5 or 10 or 20 or 50 large institutions. It's in the hands of people who leave TradFi and want to build better things. As an example, it's in the creative contributors. And so I'm really focused on reaching out and encouraging very diverse thinking in terms of who builds on Provenance. We have a hash grants program that helps encourage long-term partnership by developers to build the things. This is the new digital asset lifecycle. It's a new digital factory of finance. That's what blockchain is for finance. That means you need people that do KYC. You need people that do privacy, that do wallet on and off ramp, that do all these pieces that make this assembly line sing, make it hum, make it better than it is today. And so we, of course, need more women. Women think differently, big picture, right? That adds diversity, but it's diversity of background, education, the engineers in the room, and then the art folks that can create things very creatively, not to use the word twice. But so I think there are a lot of neat women in blockchain land. Innovation really, it cannot be only done by solely hardcore engineers per se, right? We're talking about there's humans behind the machines. You know, you need people that understand the financial flows, but you also need people who understand this tech and push the boundaries of thinking and don't come from TradFi. So we have plenty of those in our ecosystem, which are really important to push traditional ways of thinking of how things can be done. So I love the question. We definitely, of course, need more women in fintech, in blockchain and in senior leadership roles. I mean, firms that even try to really, who are dedicated to promoting and supporting women or minorities to reach the top, right? In any organization, it's very hard work. There's a lot of factors at play, but so it needs sustained commitment, really at a CEO level down for sure.
But women, tell me if I'm wrong on this, but I don't think I am. Women tend not to be more risk takers than men, and men tend to, do stupid things too. Don't get me wrong. How do we push that forward, right? So women take more risk.
Yeah, I think we need, and again, you always have to work backwards, right? A lot of the VC funds are run by men, so it needs you need funders that are looking out for amazing women to fund. Those women need amazing male mentors, by the way. I had amazing male mentors throughout my time at Citi. Of course, I had amazing women mentors too, but the men, again, can push the thinking, because there is, I think, very big picture risk tolerance, profile is perhaps different. And so that needs encouragement. And you always, again, these are teams. How are you building out your team? So you can crack the code a lot of different ways to get that risk, finger on the, or foot on the accelerator while we're thinking about managing the risks thoughtfully to have that sustained success. So you got to work backwards. It's looking out for funding. It's encouraging women to found businesses, and then assembling the right team. I mean, not to speak platitudes, but
so
sorry, last comment, Dan, but my dad was the ultimate feminist. He hates calling that, but he marched in 7th grade and asked, so my daughter needs to take algebra. This is back in the day when you didn't take algebra in 7th grade. Morgan, you can do anything the boys can do. Yeah. The teacher said, Morgan's playing with the boys, she's going to break her bones. And then I did. And my mom's like, she can play whoever she wants. So I think, a lot of it is how dads raise their girls to think they can conquer the world. There is no limitation. So I think dads have also play a really important role, honestly. So this is what I'm saying. It's quite multifaceted on how do you get more women CEOs? It starts with the dads.
Well, I'm proud to say my daughter has come to me and said she wants to file her own taxes. I'm like, go for it.
You could do mine, please, because
So looking backwards, 5 years from now, what are the things that people are going to say, oh, it was so obvious that the blockchain was going to change this industry, this business, that you think people are going to be surprised by?
Yes, well, I will say it because some people, there's many skeptics out there. I do think financial services is a really, really big one. So I'm voting with my feet, which I always do. And I really think when we fast forward 5 years, the amount of financial services on blockchain will probably surprise many. So that's my first prediction. Second, there are many, gaming is big. And I'm not a huge gamer. I'm a kind of old school gamer, like Mrs. Pac-Man kind of thing. But, blockchain are the new platforms. The platform 1.0s, the Facebooks, the Ubers, the Airbnbs, Amazons, even Apple, they're the 1.0 platforms. And the next gen, and they're the most valuable companies in the world. They bring to buyers and sellers together efficiently, and they allow many of them open innovation. The next gen platforms of the future will be decentralized. And that could be physical infrastructure, decentralizing that. That can be a lot in nature, how do you encourage farmers to not rip up their, Amazon forest kind of carbon absorption and build soybean fields, right? You can really actually change incentives. So the neat thing about blockchain platforms is they enable people to participate and reward them for their efforts, unlike old school platforms, right? An Uber platform, the driver is essential to the rider. The driver is getting paid 40% per ride or whatever the number is. They're not getting equity in the upside of Uber. And these tokenomics run on decentralized platforms in ways that give money to and value to contributors, whether they're validating transactions, staking to secure the network, doing use cases, developing smart contracts, et cetera. So you can really, it's the coalition of the willing and able. Blockchains will be Fortune 500 companies in the future. Many of your listeners might have heard of DAOs, decentralized autonomous organizations. Again, there's many things to overcome, including legal, right? Legal obligations, et cetera. But in the future, that might be how you organize a company that is extraordinarily successful, right? Because I can see DAOs being Fortune 500 companies, which probably sounds far off to many of your listeners. So I think I see the implications cross industry. NFTs allow consumer brands to engage more digitally with their customers. That's sort of like Web 2.5, right? A concert in the metaverse kind of thing. But decentralized systems are, I think most people don't have an appreciation yet of how disruptive it really is in terms of enabling people to bring their time, talent, treasure to participate in a sort of agreed upon mission and have input on what that mission looks like and how it evolves. It's really like next gen collaboration.
When we started getting involved in the blockchain, part of the reason why we did it was because we were afraid that ETFs would be disrupted because they'd be on the chain, right? And rather than on your traditional exchange. So I think you have to be open-minded on what's going to happen in the financial services industry for sure.
Totally. I think it's so forward-looking because ETFs, of course, are typically extraordinarily efficient, right? So I think it's very forward-looking that Tidal has already contemplated the impact of blockchain because it really, I think, digital disrupts everything, and blockchain is a form of digitization, enables automation and digitization of definitely different industries.
Morgan, I think we're going to end with that. Thank you so much for joining me here in the CEO Blockchain series, and we look forward to watching you block and tackle and build a wonderful platform.
Thanks so much, Dan. It's step by step, but we're excited. Thank you.
Be well, be safe. Bye-bye.